Hi everyone, welcome back to All Things Real Estate. I'm your host, Terry LaJoy with Keller Williams Coastal and Lakes and Mountains Realty. And I've got my co-host here, Shaun Sanville from Oak Hill Acquisitions. And we're going to talk about an interesting subject today, forbearance and loan modifications.
Yep.
And so we're just going to have a conversation between us about what that looks like, as we're both running into it and running into it more and more. So when you're sitting, we'll start with you and then we'll bounce back. But when you're sitting with someone and they're behind in their mortgage, one of the things that I know you're trying to do is help them get caught up.
Yes, absolutely.
And so talk about what you see as far as, and what you help people with, because I know sometimes you actually get on the phone with them and their bank to try to walk them through that. So what does a loan modification or forbearance look like for you, and do they always get accepted?
Yeah, so loan modification is going to be essentially taking the back payments that you owe and tacking them onto the end of the loan. And I would say majority of the time it's going to come with a raised interest rate and an extended term length. So it can be a good option for some folks, but a lot of the times they're not able to make payments as they are for one way, shape, or form, and then it's going to raise their monthly payment. Typically, we've seen it anywhere from 30 to 50% is, roughly that ballpark. So yeah, we'll sit there and we'll get on the phones with people, help them talk to their lender about ordering that paperwork. I can't fill out the paperwork for somebody, but I can help them. I can answer questions if they have it. And yeah, we'll just, modification is kind of the main second option that we talk about with people, because it keeps people in the home. Even though there's a bunch of negatives that come along with it, it does keep people in the home.
It does.
Yeah.
It does. And I've seen different loan modifications where they lowered the payment, but they extended the term out to 40 years, and they increased the rates.
Yeah.
I've also seen them do a silent second, and I want people to be really aware of that.
Yeah.
If the bank is working with you, that's fantastic. Just look at the whole picture, right? And sometimes they will adjust the rate, they'll adjust the term, and they'll lower the payment, maybe even do a cash out. Because I've had people that have gotten cash back from the bank to help them pay some of their other bills and to literally get caught back up so that they can get back on their feet again. People don't always realize that that money that they're getting for cash is going to turn into a silent second.
Yeah.
And that's something that I've seen show up probably 6 times in the last year, and we don't find it until their house is under contract and they're getting ready to close, and they do the title search.
Yeah. Can you explain what a silent second is for people that may not know about it?
Sure. So a silent second is exactly what it sounds like. It's a second mortgage, but it's silent in the fact that it just sits there. There's no payments. There's nothing being done with it until you go to sell. It is it's a silent lien against the property, and silent meaning no payments. And so I actually ran into one last year that had 3 loan modifications. All 3 involved cash back to the property owner, and all 3 had silent seconds. Yeah. And so that's 3 additional mortgages. It added up to close to $60,000.
Yeah.
And those silent seconds are all they're accruing interest, but you're not making payments, which means that unpaid balance just continues to ratchet up.
Chunk up every time.
It does.
Yeah, I mean, silent seconds they can make or break something for somebody. It can turn the property to having negative equity. And
quickly.
Yeah, very, very quickly. And it's a pretty rude wake-up call for people when they see that, because they think it's free money, essentially. With lenders, there's no such thing as free money. If they're forgiving some missed payments or a debt that you owe them of some sort, it will always come back around in some way, shape, or form. So that's something to be aware of, or folks should be aware of if they do find themselves in that situation, is even though it's going to solve the problem now, it will show up later.
It will.
Even if you forget about it.
Yes. Yeah. And that's typically what happens.
Yep.
And, I've heard of some people say, well, when we did the paperwork, they said that it was being forgiven. It's generally not. I've not run into a single second mortgage that was actually forgiven.
Yeah.
And so I just want people to understand that if there's a second mortgage on it, it's gonna get paid at some point.
Yeah.
And there's another second mortgage that shows up a lot as a silent second.
Yep.
And that's medical bills.
Yep.
Medical bills or any lien. Like anybody that you owe money to can put a lien on your property,
Yep.
and it will just sit there.
Until it's time to sell.
Until it's time to sell.
You have to pay it back.
And then you have to pay it.
Yep. Yeah, I mean, so can you talk about maybe the difference between like a loan modification and forbearance? Because I know we touched on forbearance at the beginning. That way people can have an understanding as we dive into it further.
Sure. So forbearance is basically they're foregoing payments. Those payments, say you're 3 months behind, maybe even a little bit more. They don't generally let you get too much further behind because then you're into the foreclosure process.
Yeah.
But they'll take those payments and they move them to the back of the loan.
Yep.
So they're still there. That money is still owed. It just gets moved to the back. And again, it sits there because it's at the back of the loan, but it still is money that's owed.
Yeah.
And sometimes people forget that.
Yeah. I see it a lot where people forget that they either did a loan modification in the past or they took a forbearance because it solved the immediate problem in the short term, and then it comes back around when it's time to sell and they're like, oh my God, I owe $80,000 more than what I thought I did.
Exactly.
And it can really sink things for them super fast. I think maybe it's probably, you want to talk about a loan modification and how you've seen it play out in terms of like, who's it good for? What are some of the positives that you've seen with it and some of the negatives that people should very well be aware of when they're looking into that?
Sure. I would say with any loan, look at the terms.
Yeah.
Read them, please. Read the terms. Because loan modification is just that. They're modifying your original loan. So if you have a loan that's maybe a few years old and you had that wonderful 3% interest rate,
Yep.
but now you're behind, whether it's because somebody got sick, they were in a car accident, they were out of work, whatever the reason is that they went behind, the banks are very happy to modify a loan like that because it's got a very low interest rate.
Yep.
Now they may modify it by increasing the years. So say you only had 20 years left to pay, they might bump that up to 30 or they might bump it out to 40.
Yep.
So now you've got an extended period of time and interest gets paid on the unpaid balance over the time. So you're going to pay that interest for a longer term. The other thing that they can adjust is your rate.
Yep.
So as they're adjusting the rate, if you have a 3% interest rate and they adjust you to a 5, 6, or 8% or higher, that significantly changes your payment. They moderate that by extending the term.
Yeah.
So your rate will go up, which would normally raise your payment, but maybe it doesn't raise the payment a lot because they've extended the term and they've spread it out further.
Yeah.
And so that's the modification, and they can do that in, any combination of rate and term to accomplish what needs to be accomplished.
Yeah.
And for the right person,
It makes sense.
it makes sense. I had a client 2 years ago that had been laid off. And they couldn't get a job making what they were making. They got behind, and we were able to help them do a loan modification through their bank and extend the payments out because they'd been in there for about 10 years.
Yeah.
So extending back to a 30-year wasn't the end of the world. It was able to get them caught back up again.
Keep them in the house.
Keep them in the house. They're still in the house today,
Yep.
which is fantastic. And get them back on their feet. And they got back to work and were able to catch up with everything else. And so now they're back on track again. But that you have to be careful of because not everybody gets back on track.
Yeah.
And you see that firsthand all the time.
Yeah, I see it quite a bit. I think some good things to touch on is like, when does a modification make sense for you? And for me, typically, it's if you fell behind for whatever reason, if that problem is still going on and is still in your life and nothing's changed, a modification is just a Band-Aid on a bullet wound, essentially. Like
It just kicks the ball down the court.
It kicks the can down the road, and 99% of the time, you end up in a worse financial position. And I see it quite frequently where I've worked with people and they've gotten their loan modifications, and then that underlying issue is not fixed, and 6 to 9 months down the line they have a new auction date because it didn't actually help them. And some things to be aware of for folks is when you are going to get approved for a modification, they are re-underwriting you for the loan. It's not just you fill out the paperwork, you show your income, you give them the documents that they want, and they're just going to approve it for you. You're getting re-underwritten for a brand new loan. And some stuff that I've seen pretty frequently is they typically want you to be making 2.5 times the new monthly payment, and you have to be working. If you're not working, then I would say 99.9% of the time, they're just not even going to look at your application. They're just going to say, hey, we're just not going to approve you for this. And now you have, this solution that you can work with. But yeah.
Can I touch on that for 1 second?
Absolutely.
So if we go back to COVID days, that wasn't the case.
Yes.
Right? Back in COVID days, they were doing the loan modifications and they were doing the forbearance because so many people were out of work.
Yeah.
And COVID was a major issue.
Yeah.
We're past that now.
Yeah.
And so now, to your point, we're back to kind of normal lending rules.
Yeah.
And with normal lending rules, you have to qualify for that new loan.
Yep.
You have to have employment. You have to have income. You have to be able to show them that you can make those payments.
And that you can afford everything and that you're not just going to fall behind again.
Right.
Another big thing for folks is if they're looking at doing a loan modification, I would highly encourage them to reach out to somebody. It doesn't have to be us, but somebody like you or myself that has been through it and seen it many, many times before and can actually really sit down and educate them along the way. And then making sure that you do not procrastinate when you get that paperwork. It's one of those things where you want to fill it out and get it sent in right away, because so often I see lenders kick the paperwork back because one little thing wasn't filled out correctly and you got to do it all over again, and then they start the process over. So typically a lender will tell you they want that paperwork 37 days out from the auction date. I mean, if you can get it in way sooner than that, that's better. But if you start getting in that inside that 37-day window, it's going to be very, very difficult. And I've seen it, unfortunately, time and time again, where the people that I'm working with they're waiting on the loan modification to come through. They're waiting on the loan modification to come through. And I've seen folks wait up until the auction for the loan modification to come through, because the lender's telling them that, hey, we're working on getting this approved for you. And the house, unfortunately, ends up going up for auction. And it's one of those things where, just me seeing it all the time, dealing with folks that are in foreclosure, if you are in that situation, if you don't have some sort of approval a week to 2 weeks out from the auction that your loan modification is approved, and please make sure if you ever are in that situation, you get it in writing from your lender that modification is approved and the auction is postponed. Because if you don't, you're playing a very dangerous game.
You are. And to that point, I'm just going to go back to something that I've said over and over and over again. You have different departments within the bank. You have the loan modification department. You've got a forbearance department. You've got a foreclosure department. You've got a collections department, and God knows however many other departments, right? Yeah. They don't always talk, especially when there's an auction scheduled.
Yep.
And so you could be talking, and you had this last year. There was a family that you were working with last year. The collections department and the loan modification department said, nope, your loan modification is approved. You're good. And you looked up the auction for them and said, no, you still have a live auction. And they're like, no, we have it. We have this email, right? They said it was approved. Yeah. And it was, but it didn't cancel the auction.
Yep.
And that house ended up going to auction. Yeah. Where if they had called you or just brought you back into the picture, because they were talking to you.
Yeah, we had many conversations
and
at that
bring
point.
you back into the picture to then take that and get it to the foreclosure department. Yeah. That could have actually stopped the auction.
Yeah. Yeah, and once you get your modification approved, it's not going to be really set in stone. At least what I've seen, it varies lender to lender. Every lender is different, and I cannot stress that enough. These are just what we're talking about is blanket guidelines that can point you in the right direction. Most of the time, that modification will not be approved until you sign the paperwork and submit it back to them, and some lenders will require that first payment to be a part of that.
Right.
So loan modification is a fantastic option for folks to stay in the house, but I like to encourage people to look at the big picture, and it's really, really tough when it's their home, right? They're so emotionally attached to it, but there's a certain time where if you look at the big picture and you can understand that, hey, I haven't really fixed my solution, sometimes the best thing, as hard as it is to say and as hard as it is for folks to understand, sometimes the best option is selling the home and getting a fresh start.
Right.
Especially if they have a bunch of equity in the home. That's the thing that pains me the most, is when I see somebody with hundreds of thousands of dollars in equity in the home and it goes to auction, and I'm just sitting there like, if you had contacted your local realtor, if you had contacted, somebody like myself that can get creative with things and really help you maximize the money that you're putting in your pocket, you have a fresh start with money in your pocket to, potentially buy a new house or potentially.
Well, that's going to be down the road.
Down the road, yes.
Because you can't do it
back to back.
You can't do it back to back.
Yeah, but down the road, you have the opportunity to potentially buy a house again, or at least get into an apartment comfortably so that you have a roof over your head. And for me, and probably you as well, that's the number one thing that we hear people say is, I just don't want to be homeless.
Right, 100%.
Yeah.
And honestly, the easiest way to avoid that is for the homeowner to work with someone like you or I or anybody else that does what we do.
Yeah.
And work with them to make sure that doesn't happen by getting them into another place and putting all that equity in their pocket.
Yeah.
Because you and I say that all the time. If we can't keep you in the house, we at least want the equity in your pocket.
Yeah.
Because that gives you the ability to get set up. And when you can go into an apartment and you know that you've got a year or 2 years or 3 years or more.
Yeah, you got runway to work with.
In the bank.
Yeah.
You've got that runway. You can do maybe some financial education. Sometimes that plays into it, and really just get everything back on track.
Yeah.
Get your bills paid off. Sometimes people get into trouble because they've got credit card debt or they've got medical debt. And so they're trying to do what's right. Like they're 9 times out of 10, these people are trying, that we help. They're trying to do it right.
Yep.
They're good people that something bad happened.
Almost every time.
Exactly.
Almost every time. Is just an outside circumstance happened and it clocked them in the face, and now they're trying to deal with it and pick up the pieces. It's difficult to see that, but we do get to help so many people and educate people that I would say, maybe this is bragging a bit, but most of the time, if people actually listen to us and take to heart what we say, they're keeping the house.
Right.
Like, that's just where we've been through this enough times where we've seen kind of everything that they can throw at us, and we can help them navigate a solution for that.
Right.
But putting that equity, worst case scenario, if the house has to be sold, putting that equity in your pocket, having that, like you said, 1, 2, 3 years worth of, expenses paid, the amount of stress I've seen that lift off of people's shoulders, and they physically, emotionally, they just start behaving different because they're not bogged down by bills anymore. There is a light at the end of the tunnel, and they know that going forward, if something happens, they have money to weather the storm. Right.
And at that point, if they had credit card debt, hopefully they're using some of that to pay off the debt.
Yep.
Now they've lowered their expenses.
Yep.
They're hopefully back to work again for whatever, if it kicked them out of work for medical or injury or whatever. Like, their expenses are down, they still have their income, and now chances are the rental is going to cost them less than what their house was. And so you've lowered your expenses and you've got money in the bank. So now you can go forward and say, okay, I do want to have a house again. Some people, it takes them years to get back to the point where they're not afraid to buy a house again, because that is a pretty big imprint on your brain when somebody's lost a house. And so it takes them some time. But during that time, what I also see is when I work with those people, they've shifted their mindset. They don't use credit cards as freely as they did before. They have more reserves in the bank. They're very conscious of keeping the new mortgage payment below what they need. Maybe they're doing it on one income instead of on two. And they're like, nope, I don't care what we can qualify for. This is the payment that I want. And I don't want to go beyond that. And I was just talking to a family not too long ago, and they were actually looking at a rental and called me and said, well, it's a little bit more than what we want to pay, but it suits our family, but it means that we can't save anymore. And you and I both have the same kind of result. No, because, okay, not only can you not save anymore, but you haven't taken into account your utilities. You haven't taken into account birthdays and holidays and Christmas and life. And the car breaks down, or now if you max out, you're going to put yourself back in a bad position. My litmus test for folks that I work with is, if you are one bad thing happening away from going under, being in a financially poor spot, having to start missing payments because you can't do anything else, that's typically when I will sit down and really have that heart-to-heart conversation with people and just be like, I know you have this attachment to the house, but you really should sell. Because I've seen it time and time again where, they get the loan modification and they don't have the reserves in the bank to, if something happens, God forbid, like you said, the car breaking down, the furnace blows in the middle of winter, something happens, and now they have no reserves to deal with that. So I would highly encourage people, if they're in that situation, that's a pretty good litmus test to use right when you get that first notice, right? Because the thing with this whole foreclosure process, there's time. There's a lot of time to deal with it. It's not just like, they send you a letter and then 30 days later you're going to auction. There's typically... Unfortunately, that's when you and I get called in. That is when we get called in a lot of the time, is when the time is short. But typically there's months and months in advance. And have that honest conversation with yourself, your spouse, a trusted friend, just anybody that will tell you the truth. And if you honestly can sit there and say, even if this worked out and I somehow managed to get caught up and everything got fixed, I am one wrong thing away from being back in the same position. It's time to, in my opinion, it's time to sell the house and maximize on the equity that you have. Because if somebody's in that pre-foreclosure stage, when there's not an auction set, they just have gotten a notice that they're in default. If you can have that honest conversation, then the things that you can do, putting it on market and getting them that top dollar, like that will drastically help them and change their lives. And when somebody calls me, there's a lot less options. Correct.
Because typically I'm getting in touch with folks, or people are calling me when they're 15, 30 days, 45 days out from their auction. And at that point, your options are very, very limited, and the stress really goes through the roof, versus I feel like it's probably a much easier pill to swallow if it's, hey, I just got my notice of default. I'm having an honest conversation with myself. I know I need to sell the house.
Well, at that point, you're choosing.
Yes.
You have the choice. And I'm even going to back up with the last couple of minutes that we have. I'm going to back up a little bit and say, before that even happens, before you get that first notice, most people know that their back's against the wall. And if you start looking at it then as to, okay, realistically, what are my options? Before you even go behind, you have a whole range of options. But as you get closer and closer to, you get that first notice, and then you get the second notice. By the time you get the third notice, they won't take payments anymore.
Yeah.
You have to pay the whole thing up front. And now your options, every step of the way, from that first notice to the auction date, every single day that ticks by, your options go down.
Yeah.
You have fewer and fewer options, and the options you have are less and less pleasant.
Yes. Yeah. The worst thing that I have happen, or that I hate to see happen, is when they've waited so long and they call me and the only thing that I can do for them is a cash offer. Cash offers have their time and place. We did a whole segment on it last week, so go check that out if you're curious about what a cash offer is. But if that's the only option, it's tough, because like their back is up against the wall. They need the cash offer, and it's right in some situations, but a lot of the times in these situations, the cash offer is not ideal. Right. And when you get down that time, like we've talked about, we've mentioned it, like how we can be creative and we can do some things that, you know, can really make the situation more pleasant, I guess, than the worst situation. But when you get down to that wire, like typically your options are out, and like a cash offer really is going to be your best bet.
It is. And as we're just going to wrap up with the cash offer, while it may be your best bet, it doesn't put a lot of equity back in your pocket.
Yeah.
It's barely going to cover, in most cases, it's barely going to cover enough to get you out.
Yeah.